Hello, good evening, Prerna. Prerna, please confirm if I'm audible to you or not.
Yes, sir. Good evening, sir.
All right, good evening. All right, Prerna. So, in the previous class, we discussed the retirement of partners, right? We did the question based on the retirement, and I think I gave you question number 141 for the homework. Is that
No,
right?
sir.
Not 141? Then I might have given you which question I gave you for the homework? 130, 130, 137 and 138, I guess.
Yes, sir.
Okay, so you tried these questions?
Yes, sir. I have doubt in 137.
Okay, tell me the doubt. Tell me your doubt.
Uh, Sir, what is the entry of Provident Fund?
What will be the entry for the Provident Fund? There will be no entry for the Provident Fund. There will be no, since Provident Fund is a liability, Employees Provident Fund is a liability that need to be recorded in the balance sheet. We won't be distributing it among the partners. So since it is not to be distributed among the partners, so therefore we won't be passing any general entry for this.
Okay, sir.
All right, everything is
Mm,
clear.
yes.
Okay, then I think I have given you question number 138 as well.
Yes, sir.
Any doubts with this?
No, sir.
No. Okay, then so let's quickly start with question number 139. To be in this question, so this is a different question. This is a full-fledged question based on the retirement. And in this question, we need to prepare various accounts, revaluation account, capital account, and the balance sheet as well. All right. This question is little lengthy as well. It will take some time for us to finish this. Anyways, let's just quickly start with the question. First of all, let's just read this. In the question, it says that there are three partners, X, Y, and Z, who are sharing the profit and loss in the ratio of 3 to 2 is to 1. Their balance sheet is given. On the asset side, we can see we have a cash at bank, debtors, the provision of which is 2000, stock, investment, the market value, which is 17,600, but the book value is 15,000. Then we have patent, machinery, goodwill, advertisement expenditure. Then on the liability side, we have creditors, workmen compensation, investment fluctuation reserve, capital account balances of all three partners. All right. Apart from the balance sheet, we have been provided with certain adjustment, like the goodwill of the firm is valued at 34,800. Value of the patent is to be reduced by 20%, and that of machinery is to 90%. Provision for doubtful debt is to be created at 6% on debtors. Z took over the investment at market value. Liability for workmen compensation to the extent of 750 is to be created. All right, and liability of 4,000 included in creditor is not to be paid. Amount due to Z to be paid as follows: 5,067 immediately, 50% of the balance within 1 year, and the balance via draft for 3 months. We need to pass the journal entries for the treatment of the goodwill and prepare evaluation account, capital account, and the balance sheet. So there are so many requirements of this question. We need to pass the journal entries as well, then revaluation and the capital account, and then the balance sheet as well. All right, so let's just quickly start with the let me just, I think we should first do the journal entry in this question, right? We can do the, we can see the goodwill in the balance sheet as well. So we have to pass the journal entry for the goodwill appearing in the book, and then we have a good valued, self-valued goodwill as well. So let's just do the journal entry for the goodwill part. All right, Prerna, do you think you will be able to do this?
Yes, sir. I'll try.
You'll try. Okay, so just give it a try, Zainab and Prerna, both of you, and then I'll show you the correct solution of this. All right, see, in this question, we will first of all pass the journal entry for the distribution of the goodwill appearing in the book. And as you know, for the goodwill appearing in the book, what do? We just write off such goodwill, right? So we'll have to pass the journal entry for the writing of such goodwill. And the journal entry for writing of the goodwill is just a moment. All right. So for first of all, the first goodwill will be done for first journal entry will be done for the goodwill appearing in the book. So goodwill appearing in the book journal entry will be what was the name of the partner. X, Y, and Z were the name of the partner. So X capital account will be debited. Y's capital account debit. Z's capital account debit. To goodwill account. Amount of goodwill was goodwill that was appearing in the book. So that was 6,000. Right, and this will be distributed among the partners in the ratio 3:2:1. So that means 3,000, 2,000, and 1,000. Got it? Is it clear, Prerna and Zainab?
Yes, sir.
Okay. Then we will do the journal entry for the second type of goodwill, that is self-valued goodwill. For this, journal entry is gaining partners capital account debit to sacrificing partners capital account. Now see, in this question, it is written that the Z is retiring from the partnership and X and Y will be continuing the partnership. That means since the new profit sharing ratio of the partners is not given in the question, so we will simply presume that the new partners, new PSR will be 3:2 after the retirement of the Z, and same will also be their gaining ratio. Their gaining ratio will be same as their existing ratios. Right?
Yes,
Is that clear? So
yes,
that
sir.
means That means we will have to first of all calculate the Z share in the self-valued goodwill, right?
Yes, sir.
And then we will be passing the journal entry. So total goodwill of the firm was 34,800.
Yes, sir.
So in this, Z's share
That
of goodwill will be
800.
Z's share of goodwill will be 34,800.
Into 1/6.
Yeah, 34,800 into 1/6. It will be equal to
5,800.
5,800. All right. Now in this question, clearly X and Y are gaining partners, so we'll debit their account. X capital account debit. Prerna, could you please tell me the amount?
X account amount will be 3,480 and Y is
3480.
2,320. 5,806.
All right. So this is the journal entry for the goodwill. So first requirement of the question is done. We need to pass the journal entry for the treatment of the goodwill. So that we already did this. Now is the time to prepare the revaluation account. So for that, we will have to prepare a separate format. Let's do that quickly. Revaluation account. All right. So the first thing in the question, it says that the value of the patent is to be reduced, right? Value of the patent is to be reduced. So tell me on which side of the revaluation account we need to record this,
Credit side.
credit side or the debit side? Reduction in the value of the asset need to be recorded on the
Credit side.
debit side, Prerna, on the debit side. Whenever the value of the asset reduces, it is a loss. Any loss need to be recorded on the debit side of the revaluation account. All right, is that clear to you?
Yes, sir.
So patent earlier it was of at 10,000. Now it need to be reduced by 20%. Just a minute. All right, so patent reduced by 2,000. We will be recording this on the debit side. Patents. Zainab, is that clear to you?
Yes, sir.
Okay. It says that the value of the machinery also reduced to 90%, to 90%, not by 90%, to 90%. That means it reduced by 10% only. value of the machinery was earlier at 50,000, right? Now it will reduce to 90%. That means there is a reduction of 10% in the value of the machinery. So 10% of 50,000 will be how much? 5,000. Done. Moving on to the next one, provision for doubtful debt is to be created at 6%. Currently, we had a provision for doubtful debt, which is 2,000. But let's just calculate 6% of 40,000. 6% of 40,000 will be 2,400, right? So that means we will have to make a further provision of 400. We have to increase the provision by 400. So that is a kind of loss. So whenever there is a loss, we need to record that on the debit side of the revaluation account, provision for doubtful debt. Got it? Is it clear? Zainab and Prerna, both of you?
Yes, sir.
Okay. The next point, it says Z took over the investment at the market value. Okay, let's just check the book value and the market value. The book value of the investment was 15,000 and the market value is 17,600. That means we have a gain. This time we have a gain of 2,600 on the investment, right? So we will be recording this on which side? On the credit side by investment. Investment, the value of which was actually 15,000. It has been taken over by the partner at the market value, 17,600 minus 1,500, the 15,000, sorry, we have a profit of 2,600. Is that clear? Prerna, is that clear to you?
No, sir. Please repeat this point.
Okay, see, it says that Z took over investment at market value. What does this mean? This means that retiring partner is taking the investment. You are able to see the value of investment in the balance sheet on the asset side.
Yes, sir.
So the book value of the investment was 15,000 only,
Yeah.
but Z have agreed to take over this investment at the market value, and the market value is 17,600. So this means that we clearly have a profit here. We
Yes,
have a
sir.
profit, we have a gain in the investment, na? So that need
Yes,
to be
sir.
recorded on the credit side of the revaluation account. That is what I'm doing.
Yes, sir.
Now clear?
Yes, sir. It's clear.
Then next is liability for workman compensation to the extent of 750 is to be created. So that is a liability which need to be recorded in the balance sheet only, right? We won't be showing it under the revaluation account. This is a liability. This will be recorded in the balance sheet. Is that clear to you? We won't be doing anything about this right now.
Yes, sir.
Okay, moving on to the F adjustment F, it says a liability of 4,000 included in the creditors not to be paid. So if a liability is not required to be paid anymore, that is clearly a gain. That is clearly a profit. So that means we will be recording that on the credit side again. On creditors need not to be paid 4,000. This is a gain. 4,000 on the credit side. Then adjustment G, it says amount due to Z to be paid as follows. So this adjustment is regarding the payment to Z. We will be considering this adjustment at the end of this question. Right now, this point is of no use for us. We won't be doing anything about this as of now. We will be coming back to adjustment G later. All right, is that clear to you?
Yes, sir.
Okay, so for the time being, this is it. In the revaluation account, I think we will be having a loss this time. On the debit side, as you can see clearly on the debit side, I think debit side is greater than the credit side this time. 2,000, 5,000 plus 400.
7,600.
7,400.
Yes, sir.
Okay. So 7,400, and subtracting 26 and 4,000 out of it, the balance will be 800, I guess. Is that right?
Yes, sir. 800.
So there is a loss of 800, and this loss will be transferred to partners. Loss on revaluation will be distributed among the partners X, Y, and Z. Their account will be debited by 400, I think 267, and 133. Right? Is that clear?
Yes, sir.
Okay. So this is the revaluation account. We are done with the revaluation account. This question further asked for the partners capital account. Shall I move to the partners capital account part? Janab, you are
Yes, sir.
done? Janab, you are done as well? Janab, you are done, yes or no? Janab, just confirm whether you are still doing it, or shall I move to the next part?
Done, sir.
Done, okay. Okay, this question further asks us to prepare the partners capital account. So for that purpose, we will have to make a separate format for that. So let me do that quickly. Partners capital account. All right, so this is the format of the partners capital account. In this statement, we'll first of all write down their opening capital balances, which is given in the balance sheet. As you can see, 68, 32, and 21,000. We'll quickly write this down. So on the credit side, we'll write down by balance BD, which is 68,000, 32,000, and 21,000. All right, everybody. Is that clear to you?
Yes, sir.
Okay. Now see whether any other thing that we can distribute it among the partners. On the liability side, we can see we have a reserve, workman compensation reserve, right? Workman compensation
Yes,
reserve
sir.
is there, 12,000, and investment fluctuation reserve is there also. But investment fluctuation reserve is okay. It is also unutilized. Nah? Workman compensation reserve is also unutilized. Investment fluctuation reserve is unutilized. So what are we going to do with this? Tell me.
Distribute among partners.
Distributed among the partners, right? So it will be distributed in what ratio? The old ratio or the new ratio? Old
Old.
ratio. So let's do that first. Workman compensation reserve by, I'm writing it in the short form, WCR, workman compensation reserve. When you will distribute it among the partners, everybody is going to get, out of 12,000, since they are the share partners in the ratio of 3:2:1, so they will be getting 5625. 3750 1875. And similarly, you'll do the same for the investment fluctuation reserves as well. Amount of investment fluctuation reserve was 6,000. So this can be easily distributed among the partners. 3,000, 2,000, and 1,000. All right, is it clear, everybody? Is it clear, yes or no?
Yes, sir.
Okay, now if you remember, we had passed the journal entry earlier as well. These need to be recorded in the partners capital account as well. This need to be reflected in the partners capital account as well. Now, as you can see in the first journal entry, which says goodwill appearing in the book, we have debited X capital account, Y capital account, and Z capital account to goodwill. So what are we going to do? We'll go to the partners capital account on the debit side, and we'll write down to goodwill, and there the in whatever amount they have bond the goodwill, in which their account has been debited, we will be recording that value, that amount here, 3,000, 2,000, and 1,000. All right, is that clear as well?
Excuse me, sir.
Yeah. Yes, please tell me.
Sir, workman compensation is reduced by 750 from 12,000.
Workman compensation reserve reduced by 750.
Yes, sir. Without reducing, I'm getting 6,000 of X share.
Let me check. We just a minute. There was any adjustment regarding the workman compensation?
Yes,
Yeah,
sir.
okay. We have a liability for workman compensation claim to the extent of 750. All right, so that means the amount of workman compensation reserve will be reduced by 750. That is
Yes,
what you are
sir.
trying to say, na? So that means compensation was 12,000 minus 750. Just
750.
a minute. 12,000 minus 750. Remaining balance is 11,250.
Yes,
You will
sir.
distribute it among the partners in the ratio of 3:2:1.
Yes,
So that
sir.
means 3 by 6. It should be 5625.
Yes, sir.
Okay, so I have recorded the right value, but I haven't considered that it has been reduced by 750. All right, never
Yes,
mind. So yeah, keep that in mind, since the workman compensation claim has reduced by sorry, workman compensation claim was there of rupees 750, so we will have to reduce the workman compensation claim by 750, and the remaining amount will be distributed among the partners in the old PSR. Anyways, the entry is right. We have recorded the right value, but only thing is that I haven't considered that earlier. All right, thank you so much, Prerna. Anything else? Goodwill is
No.
the goodwill appearing in the book has been debited to the partner's capital account. And then there was one more goodwill, na? The self-valued goodwill. We need to record that as well in the partner's capital account. This time, partner's X capital account and Y capital account will be debited to Z. So 34,820,2320. So I'm going to write it as Z's capital account three four X capital account will be debited by 3480 and 2320, right? And on the credit side as well, we need to show it. And here on this side, I'll write down by X capital account by Y's capital account. Amount is 34802320. Right? Is it clear?
Yes,
Everybody?
sir.
Is it clear, Zainab, to you as well?
Yes, sir. Yes, sir.
Okay. All right. So I think, yeah, one more thing is left. We had a revaluation loss, if you're able to recall, revaluation loss of 800 that need to be debited to the partner's capital account as well. So we'll be indicating that as well to revaluation. $400, $267, $133. Done? Everybody understood everything?
Yes, sir.
Now all we need to do is balance the respective partners capital accounts. So let's start with X first of all. So in case of X, we will be having our credit side is greater than the debit side. Let me just total it. It will be 68,567.25. Just a minute. 68,000 plus 5625 plus 3,000.
The answer is 76,625.
So it will be 76,625. All right, and then we will subtract the debit side values out of it. Subtract 3,000.
Hang on, let me listen.
Just a minute. So it will be 37750. Sorry, I'm sorry. It will be 76,625. Subtracting 3,000, 4,000, 3,480, 2,625 out of it, we will get the closing balance of Mr. X is 6,7,120. This is the closing balance to balance sheet for X, and we'll do the same thing for the Y as well. It will be 3,7,750. Subtracting out of it 2,000, 2,320, 267, we will get 3,1,413. All right, is it clear, Prerna?
Yes, sir.
Okay. Okay, now I think we missed one point. There was one investment that has been taken over by Mr. Z at the market value, na, that need to be recorded in the partner's capital account as well. So Z have taken over the investment, so I'll have to record that as well. To investment. Just a minute. Z have taken over the investment at the market value. Are you able to recall that, Prerna?
17,600.
17,600, right? Now, what we'll do, we will simply total the credit side of Z. Let me just total it. 21,000 plus 1875 plus 1,000 plus 3480 plus 2320.
The answer is 29,675.
Okay, so to 29,625 and subtracting out of it. Now see, in case of Z, we are not going to find out the closing balance. Since Z is retiring, so we will have to pay Z. Now comes the point G, adjustment G. See, it says that amount due to Z to be paid as follows: 5067 immediately, and 50% of the balance amount within 1 year, and the balance by draft for 3 months. All right, so what does this actually means? That we whatever the amount due to Z, let's just first of all figure out the amount due to Z. All right, let's just quickly do that. So let me show you, just a minute. Total amount due to Z will be 29,625 minus 1,000 minus 133, then 1717600. So the total amount due towards Z is 10892, right? My answer is not telling. I think I have made a mistake again somewhere. Is there anything else that we need to distribute among the partners? Let me check the balance sheet one more time.
I think, sir, advertisement expenses.
Yeah, advertisement expenses is a loss. We need to distribute it among the partners in the old PSR. Okay, I'm sorry. So it was 56250. So let's do that as well. To advertisement suspense. And the amount was 5250. It will, when you will distribute it among the partners, everybody will bear 2625 1750 and 875. All right, now let's figure out the amount due towards it. Amount due towards it will be 29625 minus 1000 minus 133 minus 17600 minus 875. 1000, 133, 875 and 17,600. Prerna, please calculate the closing balance of Z and tell me the value you are getting.
Sir, one more adjustment is pending. Bank account that we immediately payment to Z.
One more adjustment. Let me
Yeah.
check. Okay, 5067 is to be
Yeah.
immediately paid, na? Okay,
Yes.
okay, all right. So let me show that as well. So 2 bank amount is 5067. 5067. Now tell me the remaining balance. Tell me Prerna Zainab.
Sir, 4,950.
4950.
Yeah.
Okay, just a minute. Five zero six seven. Yeah, 4950. All right then. So now come back to the adjustment deed. Says that 50% of the balance amount. So balance amount is 4950, na? And 50% of this amount need to be paid within 1 year, and balance is to be paid in 3 months. So what does this statement is trying to say? This statement is trying to say that we will be it will be considered as a that we have taken a loan of 50% of the amount, and for the remaining amount we have issued a bills payable to Z. Let me show you. Remaining amount is remaining amount is 49. What was the amount, Prerna? 4950.
Yeah.
50. So 50% of the remaining amount it says that 50% of the balance within 1 year. That means it will be considered as a loan from Z. So this means Z's loan account will be debited. It is a liability upon the firm. And for the remaining 50%, what we will do, we will issue a draft. Draft means bills payable. Draft means bills payable after 3 months. For 3 months. All right, so now let's see how are we going to record this. Just a minute. I'll have to make some space here. So 2 Z's loan to bills payable. 50% of 4950 is
2475.
2475. Done. This is it. Now let's move to the balance sheet part. Done, Zainab and Prerna, both of you. This is how we will prepare the partner's capital account. I hope this is clear to you.
Yes,
Both of
sir.
you. Good. So I'm moving to the. I think I had to. Should have written this here. 2475 and 247. Now we will tell you both the sides. 29625. Done. So let's now prepare the balance sheet. All right. So first of all, we'll write down the capital balances of the partner. For X and Y, we just calculated the closing balance 67120 and 31413. Right now we will total it and write it in the amount column. It will be 67120 plus 31413 98533. Right, both of you?
Yes, sir.
Okay, all right. Apart from
Yes, sir.
the capital, we'll also write down the creditors, the remaining creditors. As you can see on the, just a minute, let me show you. In the balance sheet on the liability side, we had 20,000 as the creditors, but since 4,000 out of this is not required to be paid back anymore, so the remaining creditors will be it will only be 17,000. Creditors 17,000. Understood? Then question was telling us about the workman compensation claim was also there for rupees 750. So let's also write that workman compensation claim of 750. Then we just had made a liability of bills payable amounting to 2475. This need to be reflected in the balance sheet as well. So bills payable 2475. Then Z's loan was also there. Two four seven five. Right. So everything is done on the liability side. Let's move to the asset side. On asset side, earlier we have had cash on the asset side 5750, but out of this we have made the payment of 5067 rupees to the
Yes.
retiring partner, right? So the
Yes.
remaining cash that will be available,
683.
yes, so out of 5750 we made the payment of 5067 and remaining is still available 683. Okay, then we had the stock in the balance sheet as well, which I think remain unchanged. Value of the stock was 30,000. There was no adjustment regarding the stock. So that means the value of the stock will be reflected at the same value, 30,000. Then patent was also there, right? Patents were 10,000 and it reduced by 2,000. So current value of the patents will be 8,000. We had a debtors of rupees 40,000 on upon which we have made a provision for doubtful debt of 6%. That will be equivalent to 2400. We will be subtracting this and writing down the remaining value 37600.
600.
Yeah. And then there was a machinery as well, which reduced by
5,000.
10%. That, yeah, 45,000 will be the remaining value. All right, so this is it. We have recorded everything in here. I don't think any other item is left to be written. Just hoping that it should tally, or just try to tally both the sides. Prerna, tell me if there is any discrepancy arising or not. Do we have any discrepancy arising in the balance sheet? Yes or no?
I'm calculating, sir.
We're still calculating. Okay, do it quickly. So let me also do that. 98533 plus 17,000 plus 750 plus 2475 plus 2475. So on the asset side, we have a total of 1,21,233. Is that what you guys are also getting?
No, sir. 1,21,283.
On which side? On the asset side or the liability side?
Asset side.
Asset side. 121,283.
Hmm.
That is what you said.
283.
But on the liability side, I'm getting 121,233. So that means there is a discrepancy of 121,2833. Just a minute. Two eight three only. So we have a discrepancy of 50 rupees.
Yes,
So
sir.
there is a mistake of rupees 50 somewhere. We will have to look for that and then correct it accordingly. Just a minute. Give me a moment. Let me just first of all do one thing. Let's just total the Z's credit side first of all. Let's total the credit side of the Z. On the credit side, we have 21,1875
Yeah.
plus 1,000 plus
3480
3480 plus 2320.
Yes, sir.
So this is yeah, I've got the mistake. Instead of 29625, it should be 29675. It should be 29675. When you will total 21,1875 plus 1,000 plus 3480 2320. Instead of 29625, it should be 2975. Now, if it is 2975, that means it should also be 25,000 each, right? Sorry, it should be 2,500 each. Instead of 2475, it should be 2,500. This should also be 2,500. And this should be 26. Instead of 29625, it should be 29